All right. I'm hoping this is all coming through loud and clear. East coast of the US. Fantastic. I am just going to grab my mate Kyle, who should be joining us. But yeah, please let me know, guys, in the comments if this is coming through loud and clear. Fantastic. Thank you, Melancholy Crypto. I'm just going to post, you guys know the drill when I leave things to the last minute. Give everyone a little sec to tune in, and we've got 10 minutes or so till this daily close. And Kyle is about to jump in as well. Awesome.
Hey, what's going on?
Hey mate, we're live, but you take your time to get set up. So
camera sorted. What is going on here?
You're all right. Can you hear me?
Yep.
Okay, cool. We're live, so I'm just gonna give everyone a minute to tune in anyway and get some charts up. But you get yourself sorted. You look like you're all good to go.
Oh yeah, I'm good to go. Well, I don't know why the wrong camera was showing before, but yeah, it's weird.
That's all right. How have you been anyway, mate? You've been what have I seen? This fitness routine. You're a new man on social media lately.
Yeah, I don't know. I was just getting a little bit out of shape and stuff like that, and a lot of late nights earlier this year and stuff like that. Obviously, with the market being so crazy and trading the New York time zone.
Oh, mate, don't. I'm falling asleep right now. It's been absolutely nuts this week, and it seems like every time I have a late night, Louis has a bad night, and so sometimes I'll go to bed at like 2, and then he's up at 5, and it's just like. You do that a couple of nights in a row and you're a zombie. So,
yo, I couldn't even imagine, mate, like having a kid and trying to be a trader at the same time. It's not something I'm looking forward to, that's for sure.
No, I'm not as much of a trader as you guys. I do like to look at it every day and wait for those big opportunities, but it's hard enough running a business. But yeah, so we've got 10 minutes until this daily close. But I think what I really want to talk about today was some of these correlations that have changed. So I will just quickly share this on some different socials for people that are not aware that we've gone live. But it's that DXY, the US dollar, gold, Bitcoin, those things where there's a little bit of a change this week. So you feel free to sort of talk people through or even share your charts if you want, and I'll just share this on some socials.
Yeah, sweet. I'll get share my screen.
And I'll just make sure. Can everyone hear Kyle? Kyle's good as well?
All right.
Awesome. I think everyone can hear you, mate. Geez, let's see if we can get to that 100 likes, guys. 150 watching already, and it was 1 minute before, so you've done very well. Okay, I'll make that full screen, and you give us a quick rundown before we go to that daily close.
Yeah, sweet. So at the moment, DXY is at a really important level. As we can see, we had these 2 swing low points over here, which have seemed to be quite a significant level that price has been reacting to as we come back through here. So this is the daily chart, guys, as well. So, we've been down in this range, messing around this level since when? July. So it's been a couple of months we've been down here. And we poked our head back on top of this level and coming back down, did a bearish retest underneath that, sold off, and it'll come back up for another bearish retest. So it's going to be an important one to watch next week to see if we do break out above this, right? And we push up to this level, because this is a level that a lot of traders have been looking for. A lot of guys that trade gold, for example, they're looking at they're looking at the DXY, because what usually happens is the gold and DXY run inversely to each other, right? And also, of course, we have Bitcoin as well, which runs inversely usually to the US dollar. So obviously, because your major pairings are gold versus US dollar, or your Bitcoin versus US dollar. So when the strength in the dollar goes up, those are the opposite pairings are obviously going to drop compared to that, right? The thing is that we need to remember with the DXY, it's mainly paired against a basket of other currencies, and the major one to watch is actually the Euro USD, right? And that's a pretty interesting chart at the moment. And as we can see, it's almost an exact opposite to what we see on the DXY. So we had like a really big spike and then a huge pullback, that weird sideways chop, and then when the DXY started getting nuked, as soon as the stimulus started kicking in, we had the bull flag on Euro USD compared to the bear flag, and then we broke again, right? And now sort of been watching this key level through here for a while on Euro USD, which sort of formed the bottom for this head and shoulders pattern. They ended up breaking down, then we reclaimed the neckline, and then got rejected straight away, right? So technicals are pretty much saying more downside on this. There is this order block that sort of supported the whole range through here, which is definitely a factor. So it's going to be one to watch next week, that's for sure. And I mean, the big thing that we're all sort of watching at the moment is, okay, is Donald Trump and Nancy Pelosi finally going to stop their little feud, and they're going to actually pass some stimulus? Because I think if that does happen, we are going to see the euro actually gain against the dollar, which is then going to take us down against the DXY, right? And so then we're going to see the DXY will roll over here. And this is one thing that I've been watching for a long time on the DXY, is looking for this rollover and break below this long-term trend line, which has actually been running since the start of 2011, right? So if we go to a little bit higher time frame onto the weekly, you can sort of see the significance of this trend line that we're bouncing off it again here. So if we lose that, I think we're going to come back down to this supply demand zone through here, which is about that 87 to 89 area. And I think that's probably a decent area to be targeting for a long-term DXY trade, right? So if that does happen, what I'm expecting is to see Bitcoin to continue to push higher, gold to continue to push higher, because usually when there's weakness in the US dollar, it makes it a lot easier for Bitcoin to go on its rallies, right? So Alex has a different theory to that, and we're gonna chat about that soon, of what he thinks. There's a possibility that everything could run together. For me, because I do understand that could happen, but for me, I'm really looking for the changes in the charts to see the correlation start to shift, which is something that is sort of starting to take off at the moment. And we have actually started to see Bitcoin and the USD inverse correlation, because we were having quite a strong inverse correlation. So you
think it is, my wild theory is starting to become more likely, or still not quite yet?
I'm not sure just quite yet. I think we might still be a little bit off that sort of area from that happening. I think any major moves, it still seems to happen. But what I'm sort of seeing at the moment is if you look at Bitcoin here, right, which is we've sort of been going sideways. So we had this sort of top pattern with the head and shoulders, we broke down, and it's sort of just been going sideways from there. If we go and look at the S&P 500, the chart's completely different, right? So we've really broken away from our correlation with this huge falling wedge, massive rally. Then we had that big dump the other day, and it doesn't really seem to be affecting the Bitcoin chart that much. The only thing that sort of ran together was when we had a really nice rally on the S&P 500. We did have this run here on Bitcoin when we broke out of this symmetrical triangle and ran for 10%, right? That happened at the same time.
Do you want to?
While that was happening, also we did have a pullback on the DXY, which was this pullback here. So it's not completely out of sync, but I think that Bitcoin is starting to make its move, because we're getting to that time in its market cycle.
I was going to say, do you want to just quickly,
Sorry?
do you want to give us the 60 seconds, what you're looking for at the daily, which is now 3 minutes away, the daily close?
No, for Bitcoin?
Yeah.
All right. So, I mean, for me at the moment, we're sort of just chopping sideways in what seems to be a distribution pattern. So I'm looking for a pullback at the moment to 11K, and then I think we're going to bounce from there and looking for 12K. So for me, it looks like we're sort of having a bit of a top on the daily time frame here, and we're getting a rejection from the key order block level, which is 11,500 to 11,600. So invalidation for that would be a close above this order block weekly level, 11,600.
Yeah. Okay. Do you want to stop sharing and I'll bring mine up? And I've shared that everywhere now, thankfully. So I'm very similar in terms of screen one, share. You see that okay?
Yep, all good.
Okay, so yeah, I'm very similar in terms of that 11,500 on the weekly. I think that's where this is, really clear as well. I'll just make these a little bit smaller for people at home. Really clear these levels that high time frame, very important, and we're just we were above there. Support becomes resistance again, but on the daily, I think there's a lot of evidence to suggest that once again, when we start to step higher, some people are saying that everyone's really euphoric and whatnot. I kind of think that a lot of that is more in the DeFi and the yield farming, and a lot of that has slowed up. But if you look at the total value locked, let's just go to something like DeFi Pulse. It's not like the ICO boom at all. Like the money hasn't just flooded out of all these projects. Like here's the last 90 days since the market topped. It's kept growing steadily. Like you wouldn't even know it. It's just all those, I joked about the crappy vegetables and exotic fruits and all that stuff. That's kind of just no longer generating the hype, and I really think that's a good thing. That's what we need to get cleared out. But the actual good projects just go from strength to strength, and that's been a little bit lost on the market as well. Something like Synthetics had an incredible announcement this week, and it's just gone unnoticed by the market. On the same week that Bitmex basically have been rubbed out now, and Synthetics are trying to become a decentralized Bitmex. So it just, the CFTC comes out and says Ethereum's really exciting. We need to support this innovative technology. It just could not be a better bullish thesis for the stars aligning here. Now, here's the weekly of Ethereum Bitcoin pair. This is something that we stalked so closely at the start of the year. Got this nice big breakout, and now it's rolled over, and this is the key level we need to watch there. So if it's a little bit like Bitcoin, if we lose this level here, alts are going to hurt and Bitcoin's going to outperform. Bitcoin dominance is going to break through this. Again, it's at a key level. Starting to see how everything is lining up here, guys. So it's all about whether or not Bitcoin can get above that 11,500. I'd take a daily close at the moment, let alone a weekly. One thing I will just say quickly is that now that the DXY is closed on the weekend and the stock market is closed, even gold and silver, all these things that were kind of trading a little bit in lockstep, I think that does give Bitcoin a little bit of a chance. So like a 48-hour window to say, you've got nothing dragging you down, holding on to you. If you're going to rip, now's a good time to do it. So any thoughts on that, Kyle?
It definitely could rally from here. There seems to be somebody or an entity that's buying ridiculous amounts and protecting that 11,300 level. If you see every time we come to 11,300, it wicks up pretty much straight away, right? So, it sort of
people
looks
at
like
home. What exchange are you looking at, and what do you mean by buying heaps, pushing it up, but then defending it as well, pushing it down?
So, defending is in somebody's defending the price from going below 11,300.
Also, not from going above, because I've also noticed the whales are defending. This is their last chance, and they know it. If they can keep pushing the price down here at those key times like daily and weekly closes, then a lot of people are going to say, I'm not stepping in front of this train yet, and so they can keep accumulating under here. So there's two sides to that as well.
It could definitely be a reaccumulation for sure. To me, it sort of has the signs of a distribution pattern. If you look on the 5 minute, it's a little bit more obvious that those two big spikes look like they look a little bit more like up thrust after distribution patterns. What we're sort of seeing, the level we're sitting on at the moment is if, you study Wyckoff accumulation distribution patterns would be the level that they call the ice. And so if we break the ice, and then you get a bearish retest of that 11,300 level, then I would expect a breakdown. But at the moment we're still in a trading range, right? So it could fake out to the downside, reclaim that 11,300 level, and then I would expect it to take off. And that would be putting in what we call a Wyckoff spring, right? So
yeah, I'll bring all that up for people at home. I'll let you do it actually in just a second. So one thing I did just want to mention as well was I'm not an expert in Wyckoff, and we'll let Kyle walk us through that quickly. But just looking at this with the naked eye, what you notice straight away is a lot of red and some pretty good chunks of red. They're not tiny little bars. So this leans in favor of distribution, and what that means is that the people that want to sell are taking their chance on these up moves on lower time frames to sell into anything that's going up. So when there's a lot of selling happening here, that's very different to what we want to see. Let's just say even here in this part of this pattern, which is more like a bull flag, where we get good volume on the way up, and then in these little consolidations, there's lower amounts of selling, here, and then we can have another big move up. But then since that has happened, it's been the bears and the sellers that have kind of taken the upper hand in this arm wrestle here. So that's just with the naked eye. Fairly similar, probably even more so there you go on Bitmex. So that's why I just keep an eye on Bitmex, Binance, FTX, just generally to see what are the traders doing. So look, I hope that makes sense what I've just said there for people at home.
Yeah, 100% great analysis as well.
Cool. I'll let you share and look, I don't want the full explanation of Wyckoff, because I know it is really complicated and it's something that you guys have covered probably on YouTube and in your course and that, but just for people at home so they know what we're talking about.
Yeah, if people want to learn more about it, they can either do our course, or we actually just go to our YouTube channel and you can check it out there. We actually interviewed one of the Wyckoff master traders recently. So yeah, check out our YouTube channel. Was that good?
I haven't had a chance to listen to that. Was he a legend or?
Yeah, very good. And we're going to post another one. I think we're going to post it today, actually. And one of his students actually looks over and he goes and looks at the cryptocurrency market, specifically Bitcoin, and what's going on there. So yeah, that's going to be a really good one to watch. But basically what we have here is what we would call a simple trading range, right? And so with Wyckoff, you have distribution ranges, right? So for example, here, when we have a thrust that goes above the range high, which would be here and here, that's called an up thrust after distribution. And usually these are signs that we're actually in a distribution pattern, right? And so this level that I've got drawn in here is obviously the support at the bottom of the trading range, right? So generally what happens is you break down, if this is distribution pattern, you would come back up and get rejected here, right? So like the prime entry to get a short trade would be from this point here, right? Or you can get in short, in this area here before, it's sort of like last rollover point before it breaks, because sometimes distribution patterns in crypto, they don't come back up for the retest. You usually in like gold or silver or like the SP500, you're going to get that retest. But a lot of times in crypto, it just nukes because of liquidation engines and it just goes straight down like that. But so the key to watch though is if this breaks down like this, and if it bounces and then reclaims this level, because then it's very, very high chance that we're actually in what would be known as a reaccumulation pattern. And this is the prime entry to get in when you come back and reclaim this 11,300 level. So that's the main thing that I'm watching to see, is the price going to continue up or continue down? And when those are some of the best trades that you're ever going to get, when it breaks down, reclaims a range, and you get in at this point here. So for me, I've sort of been watching this for a little while. And I think, this 11,000 area is a really good zone for it to pull back to and then rally from there. But, it might be wrong. I'm always prepared to, get into a trade or cut a trade either way. I'm currently short. I went short up here on both my FTX accounts. And then, we sold off pretty aggressively from the range high here. After this pin got put in, I thought it was pretty obvious it was going to roll over. And so, holding that short, if it rallies, I'll get stopped out at break even. I'll take a small profit. But if it breaks down, then it's going to be a really nice trade down to 11K. And then I'll look for like a 4-hour bullish divergence or something like that around in this zone here to get long again. Because I think ultimately we are heading up, but it's just like from what level are we going to head up? Is this going to play as a bull flag and we just break straight up, or we're going to have another pullback and then go up, or are we going to have a complete breakdown with the SP500 going into the election, and we come back to close that CME gap at 9,600 and then move up. So I'm not really biased either way at the moment. I'm just looking for good trade entries and trying to get in on my profit that I've got on FTX at the moment, trying to buy as low as I possibly can before the next move takes off for Bitcoin, because I think once we do break that 11,600 level, it's really going to get pretty aggressive. So
absolutely,
that's pretty much it.
That's when everyone has the green flag, all the different traders, all the different styles and time frames to say, you know what, the big boys are on board. And that's kind of the thing that has me leaning in that no matter what happens here, I don't think we're going back to 6,000 or 3,000 or anything like that.
Be very surprised.
You just look at the amount of Bitcoins. I did that back of the napkin math the other day about Grayscale are now buying 77% of all newly mined Bitcoin just through their fund. Then you've got these other guys buying hundreds of millions of dollars worth. The hodlers, was it 63% of coins haven't moved for over a year? So you think about all those people, and a lot of those were in profit. That was the other stat I think I shared. So if you think about, I always say who's on the other side of the screen. So people aren't in a rush to sell at all. If Bitcoin goes to 15K, 20K, there's always going to be traders that take some profits. But you or I aren't going to sit there and sell our long-term coins, are we? So it's really important to think about it like that, because those coins have to come from somewhere. If these guys keep coming and saying, hey, I need $100 million worth of coins, there's not that many out there. It's starting to dry up, and there'll always be someone that'll sell at any price. But I think very quickly we can go from 10K, 15, 20, and even at 30K, there's not going to be a lot of people that are saying, oh, you know what, that's it. That's the Bitcoin journey for me. I'm selling. A lot of people really want to get to that, that 100K mark. A lot of people have come in and bought around 10. And so from 10 to 100K is that 10X, which people aim for in crypto. So a lot of reasons there. One thing, have you got some lower time frame examples of what we spoke about with like gold and Bitcoin and USD sort of moving together at stages over the past couple of days rather than inversely?
Yeah.
And I'll mute myself.
We can set a chart up. Hang on, it'll take me a second.
I'll mute myself from that hammer.
All right, so let me
share screen. So what we've been talking about with these things sort of moving inversely and whatnot, just at stages this week, there's been times when they've all moved together, which you wouldn't expect. And that ties into my big theory, which I'll share in a second, about how I think all three of them can go at once, which has never really happened before. But there's a lot of things happening in the world of finance that have never happened before. And I'm going to explain why at the end of this video. Cool.
All right, so we'll get the DXY up. So at times we do see, especially on some of the lower time frames, they do really move quite closely together. But I think the biggest one that I've really noticed is, especially with DXY and gold and Bitcoin, is actually like the major swings for me seem to be the best ones to track. So like the 4 hours and stuff like that. But I mean, as we can see here, we had this big sell-off with Bitcoin, which sort of happened overnight, and that sort of timed. I can't remember exactly the timelines because I don't have it set up, but yeah, that was around the same time. So SPX started selling off here, as you can see, and then at the same time, we can see over up here. You can sort of track it. It's a bit hard for me to point on multiple screens at once, but we can see over on the Bitcoin screen in the top left-hand corner, as the S&P 500 is selling off, Bitcoin's starting to sell off at the same time, and then we have that big dump, right? And at the same time, we can see in the top right-hand corner, the gold chart is also selling off at the same time. I mean, it wasn't having like a huge dump, but it was having downwards pressure, right? And then we'll get the DXY onto the 5 minutes.
So for people at home, the little white dots, the vertical line, they're the same time frame on the 4 different screens, so you can start to sort of see how one is moving to the other. So that's why they're like that, just for the beginners at home.
Yeah, and we can see here what you're sort of talking about, Alex, is that we sort of had this dump off with DXY and Bitcoin, where the big dump off on Bitcoin, but DXY didn't really move up. Sort of did a little bit later. I don't think that's really correlated though. But and then we sort of had this sell off and then just sideways movement on the DXY. Well, we're going sideways here on Bitcoin, right? So, you know, they're both sort of like moving down at the same time and then going sideways. Like we're sort of starting to break that inverse correlation where it was literally for a while, like the price was moving completely inversely to each other. If we go back a couple of months, but I'd have to get up specific examples of that a little bit later. But
yeah, no, it was tick for tick, like we say. So even on like a 5-minute chart, you know, Bitcoin will go up, the dollar would go down, you know, gold would go up, and these things were just almost like the bots or the arbitrages or even the crypto traders. They were just perfectly inversely correlated. And this week, just having the second screen up and keeping an eye on the charts, it's been a couple of times where they've sort of all moved in one way or another. And that's more reminiscent of back when the real fear was in the market, when sort of the initial big sell-off started back in March. Remember, when everything kind of sold off at once? And that's, I think, the whole monetary policy argument about, forget all the correlations. It's just, if we're going to have this fire hose of money and spending, everything can go up. If we're not going to get that, then and money's going to get sucked out of the economy or debt's going to try to be paid down, it's kind of like everything is going to go down to some degree. That's a massive oversimplification. But I think the markets have started to be a little bit more cautious this week about the election. But at the same time, not that if Biden wins, it's bad. What we saw in 2016 when Trump won was the markets sell off hard, and everyone thought they were going to crash because, you know, Trump was this huge unknown. But what all the fund managers were just doing was selling all the stuff that Trump didn't like and reallocating money to all the things that they thought that Trump would, you know, benefit and whatnot. So it was a huge sell off. Gold spiked, volatility went through the roof. But by the next morning, when markets reopened, this all happened after hours, which was the middle of the day in Australia time. So by the time the US markets opened, everything had almost settled down a fair bit. So Biden is talking about this blue wave, as they're calling it. He's going to spend lots of money. It's just going to be on different things. So I think either way, markets are kind of excited now about, there's probably a lot of money coming at some point in the next few months. It's just about where is it going to go.
Yeah, I definitely agree with that. Whoever wins the election, there's going to be stimulus passed pretty much straight away, right? So it just depends how much. But I think either way, the DXY is going to head down, right? And so we can see like the overall macro, like obviously here, DXY is heading down, Bitcoin is obviously heading up, gold is heading up, and the S&P 500 is heading up, right? So if we get more stimulus, DXY is probably going to head further down, and these three are going to continue to move to the upside, right? The other thing I wanted to show as well with Bitcoin is it's really long-term macro. People probably seen similar charts to this before. I mean, a lot of people have been talking about sharing it for over a year or two now. But Bitcoin is starting to move into its phase where we've been, you know, it's almost 6 months since we had the halving, right? It's about 150 days or something, right? Now we're sort of moving to that phase of the cycle where we're about to come back up to its previous swing high, its highest point of swing high before the halving, right? Which would be around that 13,900 level, right? We're getting pretty close to putting a test on for that level. And I think once we do come up and challenge this high here, it's going to move pretty quickly towards this 20K level because there's not really a whole heap of resistance in that space. So once we break that 14K level and we move this 20K level, that's when I think, and we finally get a support resistance flip of the all-time high and we move back on, towards these higher levels of this band. I think that's when we're really going to see the separation of Bitcoin being pegged against like the US dollar and being really closely followed to gold and what the SPX 500 is doing. And I think that's when it's really going to just break away from any of those pegs. And, because what's happening is there's all these different algorithms that are tracking the S&P 500, they're tracking gold, and then they're selling and buying Bitcoin based on what those other indexes are doing. I think when Bitcoin really finally breaks away and it moves into its own cycle again, because there's so much more certainty and confidence in the Bitcoin market, it's just going to take over. And anyone that's trying to match buying and selling based on other markets is just going to get wrecked, and they're going to turn them off. And then Bitcoin will finally be free to do its own thing, right? So that's the major thing that I'm watching at the moment. And one of the other things that you just brought up before, Alex, talking about Bitcoin being on exchanges and stuff like that. Not sure if everybody's seen this Glassnode's chart. A few people about Twitter.
Oh, sorry, I just stopped the screen share. If you want to bring something back up, go for it again. Sorry.
Oh, 1 second.
I was just going to start to explain about build on that point you said about Bitcoin doing its own thing, but go for it with this Glassnode.
Can you guys see? Yeah, can you see that? So, this is the Glassnode's chart, which basically is the orange line through here is how much Bitcoin is actually on exchanges,
can you make it any bigger?
The grey line is the price of Bitcoin. We can see when we put our. Can
you zoom in a bit, Kyle?
Pardon?
Can you zoom in a bit on that?
No, I can't actually. I can get up.
Can you just mouse scroll wheel or press Control plus?
Control plus. There we go.
Yeah.
No, you can do that. There you go. You learn something new every day. Basically what we're looking at here is when we actually topped out of how much Bitcoin was on exchanges was exactly when we bottomed out in price, right? And obviously it's because people are buying and selling and whatever, and they want to have their Bitcoin liquid and ready to sell, right? Whereas as we can see, since we bottomed in March after a huge liquidity event and price has been trending up, we've seen a massive capitulation in how much Bitcoin is actually available on exchanges to sell, and it's dropping very quickly, as we can see, right? So what this is showing us is that whales and bigger players are constantly moving Bitcoin off exchanges, and what that means is it's slowly drying up the liquidity for it to be sold, and so the supply is drying up. And eventually what that means is going to lead to a big FOMO rally, because when you run out of people to sell Bitcoin and there's more people to buy, it's only going to mean more and more upwards pressure on price. And now, obviously, the derivatives exchanges are feeling a lot of heat for price manipulation from the CFTC and the SEC. So, we all just saw what happened with Bitmex. So,
yeah. I really think that Bitmex became too much of a dominant player. And that day, the Black Thursday, when I made that video saying the day Bitcoin nearly went to zero, and some people were saying, oh, that's FUD. Bitcoin would have gone to zero if they didn't shut that engine down, because of just how they've just become way too powerful and dominant with that 100x trading. So I think it's a really good thing that they're not there. And I'd love to see all that sort of just pull back a little bit so that it doesn't dictate price so much. And it's just frustrating when we see these massive wicks, and just we need to kind of overcome that to get the mature the mature players really comfortable with it. They don't want to see Bitcoin go from 9K to 3K in 2 days just because of 100x traders on Bitmex. So that's good that I think we're kind of moving on from all of that.
Great.
Side note as well, so Synthetics, the decentralized platforms, they've got infinite liquidity and zero slippage because of the way they do it as a sort of a synthetic trading, and it's not like an order book that's trying to match each other and an engine that freezes up. So if we go down that path where they become a dominant player, it's so good for the space as well.
That's cool. I need to check that out.
What you're saying as well about that Glassnode chart there and the coins, it's roughly around the Bitcoin halving, you can see, is when it sort of goes from going up to going back down. And that was always going to be a non-event on the day. But if you sort of step back and say, well, look, around that time is when it's very clear that there's now half as many someone's trying to pop in and say g'day. There's half as many coins come into supply, and that is just so evident on that chart. And if you want to just bring it back up quickly, when we're heading back down and that coins available on exchanges gets towards zero, that's basically when we just start going parabolic until we hit prices where people are comfortable to sell. And like I said before, I'm not going to be selling at 15K or 20K. I'm here for the long run. And so around the halving here, all of a sudden there's half as many coins coming into supply from the miners. You look at people like Grayscale buying 77%, MicroStrategy, Square. That is all just going to continue and continue. And look at the steepness of this curve, this line. We're probably down towards zero by the end of the year. It's probably getting steeper if more listed companies, start to want to buy. Grayscale's recent report showed a lot of accredited investors were one of their biggest growth spaces as well. So, the perfect storm, guys. I know I say it a lot, and I'm a super bull, but I just think that the stars are aligning. Whatever this last dip is, if it's nasty with the stock market, if it's shallow, if we don't even get one, if your bags are already packed and you're here for the long term, that's all fine as well. But it's very exciting. I remember the China FUD in 2017. Yesterday was a little bit like that. Wasn't it OKX and all that stuff happening? So they're always going to look for any excuse to bully the market, because the whales love, picking you up in the schoolyard, being the bully and trying to shake whatever weekends they can. And I'm sure there's probably a few people in the audience that are new that maybe did sell yesterday because they're scared and they read that. And it's exactly what happened in 2017. So nothing changes. MicroStrategy or Grayscale, they don't say, a guy at OKX got in trouble. I'm going to sell all my coins now. It doesn't change anything fundamentally. It's a headline to scare you, and traders love it. Traders and Twitter, they want to perpetuate that because it gives them volatility and they can trade as well. And so I'll talk about my big theory now, but one other little theory, if you want to get your tinfoil hat. If you're China and they've been accumulating gold aggressively, we know that companies are starting to accumulate Bitcoin. Maybe there are some countries starting to accumulate Bitcoin, but China have got OKX in their pocket. So they work very closely with these exchanges. So when I hear headlines like that yesterday, it's nothing that they wouldn't have already been talking about. But if you're China and you know that you can move the market, whether you ban ICOs, ban exchanges, ban crypto for the sixth time, announced that OKX, whatever happened yesterday, who knows if they are putting on some big leverage positions and Bitmex is no longer in the picture. That's it's not a US based exchange, but it's definitely like a Western kind of exchange. So the more that China can do to bully the market, and they might be inside trading to accumulate Bitcoin. So it's all kind of plays into this theme about who knows what's going on, whether that happens or not, whether it's Chinese traders or the CCP. It's all just a little bit of theory. But if you could
I wouldn't
do
put it
that,
past the CCP at all, mate.
why wouldn't you do it? If you're trying to get as many Bitcoin as you can, why wouldn't you do it? So that's that theory there. The other theory I've got is about gold, Bitcoin, US dollar, all moving higher together. So the way I think about that is that normally, dollars get weaker, gold and Bitcoin can get stronger. But think about these big pools of money, and we're now talking these really large numbers, like trillions and trillions of dollars. If a lot of that money gets sort of sucked out of all the emerging markets at once, there might be, let's say there's $10 trillion that is moving out of the whole 100 trillion of Forex and bonds and everything. So let's say that $10 trillion is looking to rotate out of wherever it is to somewhere new. Now, if a couple of trillion of that, or the majority of it, goes into US dollars, the US dollar is going to strengthen against all those other currencies. But if $1 trillion of that goes into gold, but that's it's a smaller number relatively, but the gold market cap is smaller relatively as well. So gold can go up, and it would actually moon in every currency, but it would still do really well in US dollars, even though the US dollar is strengthening compared to those other currencies as well. So it's all kind of relative here, and particularly with Bitcoin, that's so small imagine if $1 trillion went into Bitcoin and people say, oh, it's going to go down because the US dollar is going up. It's like, no, relatively it is so small. Bitcoin's going to do it 10x, even though that the US dollar is getting stronger. So it's all about the pools of money that are relative and where they're going to flow. Because for the first time ever, I think that Bitcoin and gold are now going to start to act a little bit more like currency alternatives or just asset class alternatives rather than these sort of smaller little markets that just kind of move around a little bit. So that's kind of my theory with how that all fits in together. But any thoughts on that?
Yeah, I definitely agree that can happen, right? And a lot of people they get caught in this thing where, Bitcoin can only go up when the DXY is losing value, but because they're pegged against each other. But I just don't believe that that's inherently true. Yeah, on the lower time frames, that's what happens when both markets are moving sideways. But when you look at the macro, you can definitely have Bitcoin going through its parabolic rally, right? While the rest of the world's currencies are all shooting the bed and moving into US dollars because there's mass panic, global collapse of economies and stuff like that, or even just the bottom 50 countries in the world, they all move out of their local currencies into US dollar, right? Some of them might be going into Bitcoin at the same time, and they might also be going to gold at the same time. So gold can be going in a massive bull run to like $5,000 or something like that at the same time as people going to Bitcoin, and that pushes up to like 50K or 100K or something like that. At the same time, the US dollar getting really strong as well because people are panicking trying to get out of their various currencies. And I think you probably have to have some of the bigger ones start to have a big pullback, like the euro, the Great British Pound, Australian dollar, and things like that as well. But I mean, you can definitely get a lot of movement from the bottom countries on the list as well. And I think it's like 22 countries at the moment having currency crises. So it's like, how much more of these are we going to see in the next 5-10 years?
Yeah, absolutely. And I'll share this. Actually, I'll share screen so you can see it as well. This tweet thread that I had up the other day, because for the first time in history that I'm aware of, it's been this high. So this was the US M2 money supply that grew. It's on target to grow by 25% this year. It's already grown 22%. And if we get that next round of stimulus, it's looking like it'll be about 25%. So, okay, show this thread. Let's go up to the top. All right, so compound interest, powerful force. Human beings, they don't comprehend compound interest well. Whether we're talking about their mortgage and how long that's going to take to pay off or actually compounding growth. So at the start of the year, US was 24 trillion, could end up around 30, as I just mentioned, 25% year on year. So what does that look like if it continues? So where would we be just in 10 years by 2030? And keep in mind that there's 100 trillion of unfunded liability. So it's not like the spending is going to slow down at all. I think this is the first time ever that the spending in the US has been double their economy, their GDP. Like, it's just getting absolutely ridiculous now. And, lots of people saw this coming. It's just that markets are so focused on the next earnings, a week at a time, a day at a time, a quarter at a time. And that's why we can have these big movements. So 25%, keep compounding. The S&P 500 in 2030 would be at 41,000. The average S&P CEO wage would be 175 million a year. House prices in Sydney would be around $12 million. Now, remember, 2010 wasn't that long ago, so 2030 is going to come around fairly quick. Gold's at $24,000 an ounce, that's US dollars. Silver's at $350. Bitcoin's at $142,000. This is all else remaining equal. This is if these assets just grow at the same pace as money supply. This isn't if they have like bull markets or anything. So $4,000 ease.
I love this one. The $71 Big Mac.
I know, 70. That's US dollars as well. Oof. $36 bread. Netflix is $119 a month. And if you're a tradie sitting here going, geez, I haven't really had a wage increase since 2010, you better hope that you're bringing in $890,000 a year by 2030 to keep up with inflation. So this is the big one. Wait for it. If things just stay on the course that they currently are, nothing else changes, the US has gone from 24 trillion at the start of this year to $356 trillion by 2030. So when people joke about, $5,000 gold and $100,000 Bitcoin, this chart is going parabolic now. So I think it is way more likely than people think. Like I said, human beings aren't good at comprehending this exponential stuff. No one thought Bitcoin was going to 20,000 when it was $1, and no one is no one's presented a solution on how to tackle this debt problem so far. So it's exciting when you think about those numbers.
100%. There's been a bit of talk, on some of the back channel conspiracy theory websites, the finance conspiracy theories, that there's possibly going to be another Bretton Woods sort of type scenario with the Jasara thing. And then they end up, redoing the US dollar and they peg it to a basket of currencies. And it sort of becomes like a cryptocurrency style linked to gold and a few other metals. So maybe that happens if Donald Trump wins. Maybe we get that in the last year and they just spend like crazy, rack as much debt up as possible, and then everybody gets 30 grand of the new currency in their wallets, plus all the other money that they had, and we go onto a new world. I don't know.
Yeah. So for those that don't know, Bretton Woods was kind of just like an agreement where they all got together and said, we've basically just kind of got to like reset and decide what levels we all are to each other, and reset some of the debt and that. So all that gets very complicated as soon as one country defaults on debt to another. All these banks are interlinked, and then you've got geopolitical tensions. There's no easy way out of it, and apart from Bitcoin, I think joke about it, but it is, how easy is it just to say, well, I'm not going to be part of that system, I'm going to be part of this system with my finances. Right. So look, we've been going an hour or 45 minutes. I didn't want to go too long on a Saturday, but any final thoughts for people? I'll have a look at the chat. If we've got some awesome questions, we might stay on, but any final thoughts for people?
Yeah, mate, final thoughts. If anyone's interested in what we were just talking about then, the whole redoing of the currency and basket of metals, stuff like that, digital currency version, go and have a look at what Judy Shelton's been saying, which is one of the new Federal Reserve appointees that Donald Trump put on, because that's sort of like one of the ideas she's been floating for a while, which is pretty extremist view that most people in the finance world would have. But some people also think there might not. What's the alternative? What you just went through, those examples, that's the alternative, I guess. Tradies on 890K, you're paying $71 for a Big Mac, a home is worth 12 mil or something. Like, that's the alternative. So it's like, I don't know. I think eventually they're just going to keep printing and then something will happen. I don't know.
Yeah.
That's my theory.
He's just it's the first, like you said, the first part of this curve doesn't seem that steep or that bad, and you say, compared to a few years ago, geez, the cost of living has gone up, and we see it. We see inequality widening, and it feels like it's getting more expensive. But if you haven't got a wage increase, this is just the data. Most Aussies haven't got a wage increase in the past 10 years. So can you imagine being on 75 grand a year still as a tradie when you need that 890 just to get by? And printing the money doesn't address it, because my sausage machine analogy, they're putting it into the banks and they're putting it into reserves, they're putting it into the stock market. The rich get to spend it first. Everything with the system is wrong. They need to turn it on its head and give people money directly, but then they'll start to get inflation, because all of a sudden you're actually giving wealth to everyone rather than concentrating in the hands of a few, where it doesn't really matter if they've got uber wealth. It doesn't show up as everyday inflation for people. So we could talk all day, mate, but I really enjoyed that. I think people have got a lot out of that. Please smash that like button if you did enjoy it, guys. If you want us to do more of these, I think we're definitely planning on doing like a monthly update with Troy and Kyle. For those of you that are members, we're going to try and do like a monthly TA report as well. Everyone's trying to join the chat now, but yeah. What are you up to for the rest of the weekend, mate?
Mate, going to keep it pretty easy. Just reveling in the victory that Richmond had last night. I'll be watching the footy tonight.
I did watch that. That was awesome.
Yeah, looking forward to next week. We'll see if I can find a way to get up there. But Melbourne's still in lockdown. Hopefully, we get some restrictions eased tomorrow. But at the moment, we can't do anything in Victoria. So
I honestly forget about it. So I was talking to one of our staff who's in Victoria, and he's moved there, and you just forget that he's moved out of home and hasn't been able to leave to go see his parents and stuff for 6 months, and we just forget because life is basically normal here in Tassie. It's so hard for those people in the city, and there's the 5K rules, and if you're living in these apartments by yourself, man, like the mental health side of things is it's definitely coming into play now, and that's why I wish we had have just stamped it out early, but we're fudging around, and now it's probably the point where we don't need to be fudging around. But anyway,
we had one case today or something. It's like, come on,
whole other conversation. Cool. Man. Well, guys, hope you enjoyed that. Smash the like. Our new website will be up hopefully by Monday or Tuesday. I know you guys have been itching to get on that. Troy and Kyle will have a bit of a section there as well. Talk to you again soon.
See you later, guys. Thanks for chat. See you soon, mate.